everyone, welcome to the Trading Market Technicals morning call video for Tuesday, January 28th. Well, the selling continues. Dow Jones down 41, Nasdaq down 44, S&P down almost 9, and the Russell down 16 points. So their liquidation is across the board, selling throughout Asia and Europe. Now, last night we had some positive developments. Last night we had the Chinese government inject some liquidity into their market, as well as some trust firm, undisclosed the name, but some wealth management firm also helped stabilize China, which that's what everybody's really kind of looking for, not looking for any type of default. And sure enough, the markets did rally. At least the Asia session held up okay for the last bloodbath that it's been taken for the last 4 days. Shanghai was up about 5, Nikkei down about 25 points, which is nothing, and Hang Seng down about 15. So we're getting a little bit of carryover for that positive momentum. The S&P E-minis are up about 7.5 handles right now in the pre-market session. So we'll see. I mean, we are a little bit oversold in the hourly chart. I'll show that to you in the chart segment. So it's something that we could bounce, but is that something that that maybe that bounce will produce maybe further rally? I'm not sure. We don't know that until the bounce gets underway. It could be just some sort of a dead cat bounce, and then the markets roll over again. I suspect some further downside. I think that we're going to have some further downside. Not, of course, without getting some sort of a short covering rally, some sort of a squeeze. So remember, nothing goes straight up or straight down. So if the markets are right now in a short-term downtrend, any rally should be sold into. Now, until otherwise, we did break some key pivotal support areas. But I want to show you where we are here on the daily charts on some of these indices. And to me, it looks like we may be poised for some sort of a bounce. And you wouldn't want to get short into a hole here down 5 days in a row. I mean, that's something that's ridiculous. So just keep that in mind. We also have the FOMC minutes coming out now. We have FOMC meeting, today and tomorrow, and they're going to announce what they're expected is another $10 billion rate cut. Now remember, non-farm payroll numbers for January were dismal. They're only 75,000 or 74,000. I don't know if that's going to hinder. If they reduce if they maybe say, okay, we're not going to cut this month, that would rally the markets as well. So we do have some possible positive catalysts in the cards here. So it's something to kind of watch out and see where we go. In the meantime, when you have some sort of a mass liquidation, even good stocks are getting sold. Selling is getting across the board. It's the time is where you would say to yourself, if you are a longer-term investor, now is the time you want to start nibbling a little bit long. Remember, we can still go further. We can still go down to 1700 and still be in an uptrend. But if you're okay with adding a little bit to your longs, that's fine. If you're swing trading, I would basically, if you have long positions and you're in this in the downtrend, just kind of ride it out. I wouldn't be adding anything until we get some real good positive momentum to the upside, building some sort of a base, and then starting to break back up some key pivotal support areas. So I would kind of not, maybe a little bit if you wanted to nibble in, but to me, I would kind of step aside right now. So anyway, let's take a look at what we got. Yesterday I showed you the bar chart momentum index, where we were almost at these extremes. Well, I'm not showing it to you today because I want to show you the McClellan Oscillator, which is a little bit of a longer term. We like to use this more with anywhere from a day to like 3 days or a week. This is a great swing trading indicator of where the bottoms or the tops may be. Now, as you can see, we're out of that Bollinger Band, and we're right around that 55 area here. I like to see it get down to here. This is the sweet spot. 70, 80 is the sweet spot. Now, obviously, if the markets are going to hold today, it's going to take this area here where I have the line, and it's going to break back up again. But you see how we had the pop below, boom, big rally. And we had a little bit of we didn't really breach it, and then here we rallied again. So to me, this is going to be a sweet spot to say, maybe we're ready for a little bit of a bounce. And we could bounce into this 20 area and then fail again. So that's possible. So that's why I wouldn't get too wrapped up in loading the boat long yet, because the market hasn't proven to us that the markets want to indeed go higher. So just keep that in mind for the coming sessions. Now, obviously, I would be looking for the best trade setups. And if I don't find anything, I'm just going to take a step back, have the pallets ready to rock and roll when in fact the markets do really give you a good signal, because right now everything is just selling off, and I would be looking for, and what I'm doing is building a list of quality names that have held up well during the last 5 days. That's what you want to look for, and of course you need to build a short list as well. All right, so let's run through some of this stuff. Here's the McClellan oscillator I showed you. So I am looking for excuse me, despite that the markets are up 7, I am looking for possibly a little bit of a bounce here. Even I would have, ideal situation would be the market sell off this morning really hard. We get a down move into this area here, and then we start to turn positive. We get some positive internals of the market, and then the markets roll higher. That's what I'm looking for. I would have loved to see that today, and that would really flush all the weak hands out there. Any margin calls, somebody just basically hoping and praying for a bounce, and then they want to get out flat. So that's what I'm looking for. I would love to see that, but I don't think that might happen this morning. We'll see. We do have some econ data out this morning that may just change that. All right, so any weakness, further weakness today, maybe a break push lower, that would entice me to start looking for some longs, okay? Because we are deeply oversold, at least in the hourly chart. Now, here's FXI, right? We talked about the emerging markets. It actually sold off and then kind of came back into this area here. As you can see, that big top and tail sellers came back in again. Let's watch this. Really, we need to keep an eye on this in the coming sessions to see if we really start to break down. And I'd be looking at what Asia does in the overnight session. If you got that feed, you could even go into the Google.com. They'll give it to you what's happening in the overnight. Google Finance. It'll show you what's happening in the pre-market, in the overnight session in the Far East, because that's something that we need to keep an eye on. And I've always mentioned China is the canary in the coal mine, and they are a big manipulator of their numbers. So nothing is really true of what they're coming across. But it is what it is, and it's what you dealt with. So you want to just kind of keep it a good close eye on. Here's the emerging markets, the EEM, ETF, and again, just massive liquidation here. And we're already coming across here. We've literally in 3-4 days wiped out about a good 2 months of gains here. So let's see what happens. We are getting massive liquidations. As you can see, we're oversold in our MACD and stochastics. So another big push here. I'd be interested in looking for possible long in the EEM just for a bounce trade. Okay, now the New York Stock Exchange new lows. We finally got back above it from early December. Not quite long enough, but let's see what happens here. If this starts to go and starts to get really start gaining momentum to the upside, that's not a good sign for equities. But for now, it's just literally just crossed above it. But I wanted to show that to you as well. Stocks above the 50-day moving average broke down hard, as you can see. Now we're coming into some of these oversold territories where we may be headed for some sort of a bounce here. As you can see, right? Bounce back up, bounce up, bounce up, and now we broke down. So logical would be a back test of the symmetrical triangle here, okay? So again, everything seems to be in the cards for some sort of a bounce. Even if we sold off this morning, I still would be looking for at least a bounce where shorts would cover and squeeze the market higher. Okay, now let's go into a couple of sectors. Let's talk about gold first. Now, gold is still acting okay. We're still at this upper trend line. You can see we have this inverted head and shoulders, higher highs and higher lows, back testing the trend line. Obviously, gold is down today, and obviously gold, we're going to see what the Fed says, and that's going to really reflect on gold and silver. I still like gold and silver for a longer term trade. There is a little bit of strength coming into between now and February. Actually, this month coming, and then of course it kind of lacks a little bit. So the gold and silver trade is going to be definitely key of what's going to happen going into tomorrow. Now, if you're not long gold or silver, I would not be initiating any new trades here going into that risk event. If you are long gold or silver, obviously you should be long gold and silver for the longer term picture. So any pullbacks would be a buying opportunity for you. Okay. Now palladium, not doing any help. As you can see, palladium lower, gold and silver lower. That's the bottom line, guys. If you're looking to trade the precious metals, follow what palladium does, because it is the leader. USO. Now I'm getting interested. We have the bullish percent ENER. Looks breaking down here really hard, where this is actually holding up pretty well. I do like this. If we could flush one more time lower and make one more higher low off of this low here, easy to manage, and start to break back higher, I would be interested in a long trade in USO. Okay, XLF. Banks, as you know, one of the risk-off sectors, literally got clobbered. I mean, literally got clobbered. We'll show you the bank sector. But look what's happened here. we just literally a waterfall shut sell-off. And look, we're back into these areas here again. So now this is getting interesting for the bank sector. Now, obviously, we don't want to just pick a falling knife. But even for a day trade, if you see some of the banks catching a bid, because, I mean, like Citibank, JP Morgan, Goldman's coming into some good support. So if we do get a little bit of a bounce, I'm going to be looking for some of the banks, some of these sectors that really have gotten battered. Look at the BKX, banking index, coming into some horizontal support, which is huge. Okay, we're about 94 cents away from the support area here, and we're at the 50-day moving average. So this is something that I'm going to maybe be looking for a possible long trade. Now the VIX, I mentioned the VIX. I go watch guys for the VIX when we break out of this band. Now this is the 2 days that we're out of this band. Look at every time when we got back into the band, we had a massive sell-off in the VIX, which put us into a buy mode in equities. Remember, it's inversely correlated. Okay, so as you can see here, we're outside the band, and now we're looking to break back in the band. If, in fact, the market holds, this will break back in, give us a buy signal and a sell signal for the VIX. So this is a great indicator. And by the way, this little if you will, the mechanical trade system on the VIX has been known for many, many years. A lot of longer-term old market participants, some of the old-timers, some of the older guys that have been trading for years and years, always play this system. It's almost like you have to. Yesterday, there was $18 million worth of VIX calls sold, which means that he's bearish on the VIX yesterday for about 70 cents. The February 22s, I just saw it on Bloomberg this morning. That is a massive, massive bearish bet on the VIX. And sure enough, he's going to be paid off handsomely if this market stays up at this elevated. So not a bad trade, but just want to let you know, you could definitely, even if you don't trade it, but it's a good signal for a long trade, once we get back into that Bollinger Band. So we need to close today below in that band. That would give you a buy signal, at least in equities, that we're going to have a short-term bounce. All right. Even the S&P, here's the daily chart. As you can see, I put the MACD stochastics in here. As you can see here on the hourly, we are on the daily chart, we are oversold. And now we're pointing higher. Here is the candle for this morning, because it's the continuous contract, and as you can see here, we're up about 775, 8 handles, and we have this little dotted line. It's horizontal. I wanted to change it a little bit. I know it's a little bit hard to read because you got the MACDs, you got the stochastics, you got the grid lines, and you got the Fibonacci retracements along with the moving averages. So I wanted to put this on here. This is you got a little confluence area of support here, as you can see. Now, I think where I'm looking for retracement back eventually when this sell-off ends is probably going to be somewhere around the 1720-ish area to 1740. This is what I'm looking for right here, and we would still be in an uptrend, guys. So I'm looking for somewhere in here, pierce this area. Not going to happen in a day, not going to happen tomorrow, but it does take a little time. That would be very healthy for the markets for another move higher. Okay, but again, it doesn't have to happen. Just saying, it would be nice to see something down here, a good 10-12% correction. That would be fantastic, not just a 3-day liquidation. But again, if this holds and we start to run back up again, we want to see where it would fail, okay, and then we would start looking to sell rallies. That would really give you confirmation that now we're indeed in sell rallies mode, okay? Right now, it's just a bounce. Maybe we get a little bit of a dead cat bounce back up into the 1800 area. Okay, I think that would be an ideal spot. All right, here's the hourly chart, and as you can see here, this is where I'd be looking for right up in here. As you can see, we've got some key pivotal areas, 36, 40, 50, and then, of course, you got down here. This is where I would like to see a big spike lower and then back up into these areas. So, as you can see, these are valid points, and we've had some bear flags, and now we're flagging again. Up about 8 handles. Let's see if we can get some momentum to get above these hourly moving averages. That would be positive. We can take out this little spot here, this little pivotal high, and we start breaking back above it and close above 1800. That definitely would be a bullish sign that the markets are at least pausing from a downside move, and then maybe let's see if we can get back up again. Remember, this is the spot here. 1792 is this previous swing high from yesterday. We can get back above that and above 18 on a closing base. That would be positive. Okay, let's take a look at some of the index charts. Now, this is where I got the number. Obviously, is the we have an uptrend channel in a weekly chart, and then the spot is really about 1740, 1744. Breach below it, And sometimes the markets overshoot down to 1720 and then back into the channel. That's what we want to see. Remember, even if it get down to 1740, 1720, you're still within this uptrend channel. Even if you break it back below it, it would need to come back before, get back above it the next day. But even then, you would be back above in this channel. So still looking pretty constructive here, okay, on the weekly chart. Now, daily chart shows a little bit of a different picture, obviously. We've had some massive liquidation the last 3 days. 4 days, actually. We did break this horizontal sideways trend line, and now we're probably testing this lower trend line of the March 2012 lows, okay? So this is where it's going to have to hold here if we do get that flush, okay, to 175 in the spiders. And the diamonds now looks like the logical spot is going to be a test of the 200-day moving average. Again, if we do get up, break up higher, and there's some econ data coming out today, so that could literally skew anything, any gains we have in the pre-market session. Okay, and then of course FOMC meeting, they're going to come out and announce their minutes tomorrow, and if that happens, we could actually see if they don't like what they hear and what they say, this market could really sell off hard again. And the logical spot would be the next target, be the 200-day moving average in the Dow Jones. Now, transport's also taking on the chin for the last 2 days. Not good. This is our leader, and if we do break this other trend line here, it's going to really hold the key, 125, and then of course this longer-term trend line from the March 2012 lows coincides pretty nicely here with this one. So we're going to have some confluence area of resistance, of support, excuse me, and this is the spot where we'll be looking for the next downside target if the market would like to sell off or at least continues. Okay, IWMs, as you know, this is the 2012 lows. We hit it literally by within the penny, and now this thing needs to hold, because if this starts to break down, this is not going to be good, bode well for the other indices as well. This is another leader, and we're breaking down here. This would then test some of these pivotal areas of the 200-day moving average. And the Qs, now the Qs are going to get killed on the open. They're down pretty big because of Apple down 50 points. I didn't read their earnings transcript, but obviously something they didn't like what they saw. So Apple's going to be down in the 500 range. Let's see if that holds. That's going to kill the Qs for this morning at least. Okay, GLD, just want to show you the GLD chart. Again, breaking back above it. Now, to alleviate any downside pressure, we really need to take out the previous day swing high, which is 122.63, to really get going to the upside and at least testing that 200. So gold and silver is going to do not much of anything. Here is the XLE. Now, once this downside pressure is alleviated, I'd like to see, now this is a 200-day moving average. So the oil services, the Schlumberger, the Baker Hughes, the Halliburton, those are three good picks coming once the market starts to alleviate and we get a good push in oil. That would be also another good three stocks to look to buy. Okay, USO, same thing. I'd like to see a little bit more downside. I want it to hold this area here, 33.30. If we can get a little more downside and hold and then start to rally back up, a great entry, easy to manage, and again, bullish percent getting into oversold territory. XHB, what can you say? Getting clobbered, holding above the 200-day. That's the ETF for the home builders. Just going to quickly run through. Here's Lennar, barely holding on to the 50 and 200. But again, I think these are going to be good buys on weakness. If you are looking to build a longer-term portfolio, nibbling in here would be a great opportunity. Now, if you're just swing trading for a week, 2 weeks, then I would just let it go. Don't touch it. Wait until we get some sort of signal that it's now basing. Let it form another base and then break out of that base. Now, KBH, same thing. KBH got downgraded from Tier 2 house, so it took it on the chin a little bit, but I still like this chart. There's no question about it. Still got to break above 1850. If we break above 1850, or if we could put a lower high or catch this low here, no reason why you can't nibble down here because your stops would be below this line here. So KBH still a good buy. I like KBH as well. Here's the XLF coming into the support. So now, right now, we have a decision here. Okay, you have horizontal support. You broke the long-term uptrend line from the March 2012 lows. This is a decision maker. This has to now get back above. If not, this breaks down. This will now follow the 200, and the banks will follow suit as well. Okay, Citibank, as you can see, really, I mean, it amazes me. This thing just really got clobbered the last 6 days. totally taken by surprise on Citibank making new highs and then literally just dumped. Now, it's outside the band. It's also oversold, and I am looking for a bounce back into this trend line, into this symmetrical triangle, and at least a bounce to the 51.43 area. JP Morgan, same thing, really kind of took it on the chin. It's still above the 200, holding up better, but it needs, again, a little bit of work before you want to nibble long for a swing trade. Goldman Sachs coming into support here. Like I said, I'd like to see it at 200. Now I'm interested in looking for, at least just for a trade in Goldman Sachs, a little bit lower, maybe a test below the 200, and then a back up, and I'd be looking for maybe some of a short-term trigger, 5-minute, 15-minute chart in Goldman Sachs. Okay? And last is Apple. Apple trading at the 500 area. This is what I'm looking to see. Now I'm interested in Apple. If it holds 500 and we can base a little bit, I would be a better buyer. But if not, your next target is going to be 482. Don't catch a falling knife. Remember, if there's a lot of longs are getting caught up here. We have our Carl Icahn tweeting out that he's long. That's what really didn't make any sense to me. He's buying into the earnings, which is that doesn't make any sense at all. Now he could have bought all of that stocks that he bought a few weeks back. He could have bought it $50, $60 cheaper. So not so good for Carl Icahn, at least for the moment. But again, let's take a look at it. If we could base a little bit more, then I think it would be a great little play. All right, guys, be safe out there. Use your stops. Cash is a position. Remember, when in doubt, cash is a position. Let the markets, let everybody get their fear out. Let them crash the market. Let them crush the market, and then we pick up the pieces and buy stocks. And that's what I'm looking for. I'm looking for a spot to buy, or I'm looking for higher prices to short the equities. Okay? Have a great day. We'll speak to you tomorrow. Take care.